The US dollar is weaker versus the three major currency pairs: the euro versus US dollar, the dollar versus yen, sterling versus US dollar, ahead of the US jobs report. I'll go through the technicals ahead of those reports, what traders could look for clues as far as more bullish or more bearish. So let's get started. As mentioned, the dollar is weaker against the euro versus US dollar. That manifests itself with the increase to the upside for this currency pair. When the euro goes higher, the dollar goes lower. That comes after the price yesterday broke above the 61.8% retracement and the move down from the September high to the low price that we saw in January. That should have been more bullish, and indeed we saw increased upside momentum, but then the price fell fairly quickly, but did find support against what we needed to get through to show that the sellers were taking back more control. That was this level right through here between 1.07609 and 1.07767. As you can see, the price low came within that area, found support buyers, slowed the decline, and then we started building trading here today. We moved back above the 61.8% retracement right through here and extended above the high price that we saw from trading yesterday at the 1.0853 level up to another swing level going back in time to here. You can see that how the price stalled in this area right through here with different swing lows and swing highs coming into play. Admittedly, the price traded below the level right here, but still utilized the level as resistance right here and then support right here before breaking to the downside and starting the rotation lower. So this level right here near the 1.08725 is going to be minor target to get to and through. What close risk is on traders who would perhaps tilt the bias more to the downside and trade today would be a move back below the 61.8% retracement at 1.08174. So as long as the price remains above that, the bias can still push to the upside during the, up here at this other swing area up here between 1.08 right around the 1.09 to 1.09126 level would be another area to get to and through. And then we look toward these highs and lows right through here around the 1.0950 level on the top side. So 109, 109.50, those are natural levels as resistance as well. So be aware of those levels on the top side for further momentum. Again, watch the 61.8. If we move below that level, then look for this swing area right here, which was the low from yesterday's trade, to be a key support. By the way, the price has seen a sharp move to the upside in trading this week. Has it gone too far, too fast? That will be determined today by the U.S. jobs report. Let's take a look at the dollar versus yen next and take a look at the 4-hour chart for this currency pair. In trading this week or yesterday, I guess the price came down to this swing area right through here. Again, the swing area is defined by first some swing highs right through here that's formed this ceiling. You can see the ceiling in place, move lower, trying to move lower through here, didn't get very far, then broke above that level, and they used the level as support right here as a floor before moving to the upside. We returned back to that level in trading yesterday, and lo and behold, what did the market do? It stalled at that level. Why? Because risk can be defined and limited against a level, and there's a history at that level as a ceiling, as a floor. So the market remembers it and has a history. The market rotated back to the upside. What we didn't do was get above this area right through here, which was, you can see how that was developed. Whoops, didn't mean to do that. I meant to do this. Was developed by this area right through here, where we had a floor, obvious floor right here, or a reversal point right here, V reversal, and then we came down to that level in trading last week, found support buyers, and in trading this week, we also tried to find support buyers against that level, but traded above and below, and ultimately moved below the level. So this level up here at 148.56 to 72 is going to be a level that on further upside momentum we need to get to and through, along with this level right through here, which is the low from earlier this week at 148.10. That would increase the bullish bias going forward on the downside. Get below this 147.22 to 33 level, and then the 61.8% retracement would open the door for further selling in the dollar versus yen. So this area right through here, just below 146.90 would probably be more bearish for the dollar versus yen. So keep that level in mind on the downside. On the top side, watch the 148.10. Then 148.56 to 72 level on the top side to get to and through to increase the bullish bias. Finally, let's take a look at the sterling versus US dollar. And like the euro versus US dollar, this currency pair has been moving to the upside in trading this week. And trading yesterday, we moved up to test the 61.8% retracement. And lo and behold, we found willing sellers. That's how this moved down from the September high to the low price that we saw in the month of January. The 61.8 came at 129.23. We rotated off that high, but did not get back to this swing area down here, which was broken in trading yesterday. After testing right here, we moved above it, moved below it, and then rotated to the upside. And this area right here, 128.30 to 40, looks like 42 or something like that, would need to be broken on the downside to have traders thinking about the 200-day moving average and the 50% retracement down through here. This whole area is going to be support just by virtue of the fact that 200-day moving average, 50%, those are two key levels that I like to look at, and the market likes to look at as well, and as levels of determine the bias either more to the upside or more to the downside. So but get below this level at 128.30 would be a step in the bearish direction off of a stronger U.S. jobs report, most likely, and that would give the sellers some control. Absent that, and really the buyers are more in control, especially above the 61.8% retracement, trading at highs for the trading week going into this U.S. jobs report. On the top side, there's really isn't a lot of resistance until up here near the 130.44 to 58 level. Of course, there's going to be natural resistance near the 130 level as well. So be aware of that, somewhere in this area right here. So just understand that 130 when then we start to look toward 130.50 level in the sterling versus US dollar. So good luck with your trading during the US jobs report. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.